Hello, everyone. Welcome back to the channel. It's Matt with Green Bar Trading, back with another week outlook video. We do these every single weekend. And I'm sorry about the video quality. I will be getting there. Okay. So once we break 1,000 subscribers, which we are almost at, it's going to be any week now. We break 1,000, I get new equipment. And that's my gift to you, the viewer. And what you can do for me is just hit the thumbs up. It helps the channel grow. It helps us get to 1,000. We started this not long ago, a very small, making some videos here and there, and then we just started killing it. We created a Discord, and the rest is history, which I will link the Discord down below. It is a great group. It is an awesome group. Everybody is in there trying to help each other out. New traders, older traders, great ideas just being thrown all over the place. It's really nice to see. It's free. Why not join it? So that will be in the description. And then over on Twitter, every morning I post key areas. Now, this is how I trade. I trade support and I trade resistance. These are key levels in the market. Price action always comes to my levels like a magnet. And where there's buyers and sellers, I mean, it just makes things so much easier because you want your trades to be taken place with the wind behind your back. So let's say you're trading call contracts on the SPY. You want to be taking those call contracts where there's a lot of buyers that are going to push your price. So after you buy it at support, there goes price, it takes off and goes to our next key level. If you are taking a put contract or trading short, whatever the market, you're going to want to trade by resistance areas. And then, once you get a lot of selling pressure, you get the move down. The rest is history. This is the way that I trade. Always trade with the market direction at your back. So those are key levels we post every single day, and they really are important. So the week ahead, okay? To talk about the upcoming week, we have to have some context from last week to talk about here, because we need to know where we were coming from. Now, what happened last week was the meme stocks, okay? The heavily shorted stocks ripped, okay? You got to be living under a rock if you don't already know that. AMC, BlackBerry, GameStop, you name it, those stocks took off. So that was great to see some momentum in the market again. I feel like it's been months since we've seen momentum like that. So that was great to see. Also, on Friday, the NFP, so the non-farm payroll number came out. This number was not really that great, which is great for equities. So all your high growth stocks, your tech stocks, the S&P 500, even the Dow stocks, they all took off, because when a jobs report is not good in the current market, what you get is the 10-year bond yield goes down big time. I think it dropped about 7 or 8 basis points on Friday to close at 1.55 or 1.56. When that goes down, the tech market rocks. And that's exactly what happened on Friday. Now, this was interesting because, so when the jobs numbers are not that great, the thinking is maybe the Fed will hold back. Maybe they won't, taper their, all the stuff with the bond, the buybacks, and all this other stuff that the Fed is doing with this monetary policy. Well, and interest rates, investors, financial planners, big institutions, hedge funds. Well, you know what they say? We're not going to put money in bonds, and we're definitely not taking money out of the stock market. We don't think interest rates are going to be going up anytime soon. We're going to listen to the Fed with what they've been saying. Maybe inflation is transitory. And that's why we got the rocket up on Friday. Now, on Thursday of last week, we saw key levels in the market, and I'll just bring those up here. We saw key levels break in the tech market, which is the QQQ. Let me just move this here. On Thursday, this is Thursday's trading day. So you can see here, we were in a very tight range for like 2 weeks in the tech market. 2 weeks. We broke that level, okay? When that happens on a consolidation after a breakout, when it breaks down, that is not a good sign, but only in this market would that not even matter. So a level that was used as support this whole time breaks. And what do? The very next trading day, rip through that like a hot knife through butter and totally regain this level. And not only regain this level, but take over the level that we tried to break for all of these times in one trading day after a move like that. So once again, stock market, day trading, investing, swing trading, it's not easy, okay? A technical move like this and then a fundamental move like that with the payroll. I mean, it's trading is tough, okay? And it's risky. And if you're new, you have to realize that to be consistent, you have to manage your risk. So anyway, that's basically it for my preaching, which has nothing to do with the outlook this week. But as I look at the QQQ, now we take a look at the SPY and a little bit less of a break on Thursday, okay? And then we regained this level within the same trading day. So this was a lot cleaner action to me than the tech market. This is very clean. We broke, instantly recovered. We even tested it in the after hours here, and then went up here to the next level, which is what we saw on Friday. Now, where price is currently sitting, and I could just take a look at the futures, showing all my trades. By the way, I don't know what happened to Thinkorswim here, but Thinkorswim totally erased over the weekend all of my watch lists that I had set up here, and all my price levels on some of these tickers totally got wiped away. And it's like previous history from, months ago. So very frustrating. Now I'm going to have to, re-put in all of my watch lists here. I mean, I don't know what they did over the weekend, but this is not fun at all. So anyway, this is the S&P 500 futures. This is where we're at right now. What we did, because the futures open at 6 o'clock about 55 minutes ago on Sunday, it looks like price traded up here the first half an hour got rejected from previous levels, and now we're trading under this resistance here, right here, this level here. 32.38 is still the all-time highs. Will we get there? Probably. It's only 10 points off of that level right now as I'm making this video. So this is the SPY. That was the Qs, little market context to know, going forward where we're sitting. We're pretty much within striking distance of all-time highs, just not on the Qs. And I just want to see how far away we are on the Qs from all-time highs. So that would be up here at 342. We're at 335. We break this level here, and then the next level, like a magnet, is going to be this huge gap to fill to 342. I mean, and we're in an ascending, perfectly ascending trend line here. We got a bounce here, a bounce here, a bounce here. The fourth bounce was right here. And now it looks like price action, is looking pretty good after this Friday. For me, price action was looking really bad on Thursday. So before we got that trading day and the payroll, which is what made tech, do what it did, the market to me looked like it was about to roll over. So what is going to be really, really interesting to see on Monday and Tuesday was Friday's bounce here. Is that going to be a legitimate rally to new highs? Or was that going to be just because of the payroll data that on Monday or Tuesday we come back down to where we were trading? I don't know, but that's something I'm going to keep an eye on. So interesting things for this week. And I've been doing a lot of reading the IBD, the Barron's, the Financial Times, Wall Street Journal, just like I do every single weekend. So Apple has its WWDC. That starts on Monday. In the past, this has tended to act as a catalyst for Apple. They might drop some new things that they're working on. It could give investors, and it did actually bounce off of this trend line that we have here. It did dip below it a little bit, but I would say that this is still consistently, uptrending because of this right here. And if we look at the daily on Apple, and I just want to put in the right moving averages. So this is my daily on Apple. Going back to October, we have seen a very nice uptrend. Now, it looks like price bounced off the 200-day and it bounced off the bottom trend line. And it's going to have the 50-day and the 20-day right above it, which, as you can see here, about 2 weeks ago, a week and a half ago, it wasn't able to break these two. So if price action can break the 20 and break the 50, then there's a potential for a breakout for this one. So this is Apple. It has a catalyst this week with the WWDC. We'll see how that does. Now, another one, a couple of stocks that have gotten beaten down in the past is FCEL. This one, and I don't know if you guys remember Plug Power. We could take a look at Plug. These were killing it, and then they sold off. But it looks to me like they're trying to make a rebound. So FCEL has its earnings coming out, a catalyst. It broke the 20, broke the 200, and it's about to break the 50. And if we start to make higher highs, which would be about $11. So about 10% move from here. We can see a nice recovery with fuel cell. This is one that I am going to definitely have on my radar, because if you look even here, we bounced, we pulled back, and then continued higher. So this price action right here at the $8 level looks like it gave a nice bounce. You know, it is up 40% just about. It went all the way down to almost $6 a share about 3 weeks ago. But it has a lot of potential to recover. Once again, hydrogen, you know, the fuel cells and everything else, this could be, you know, maybe a nice recovery in the stock. And they have earnings, fuel cell, before the market opens on Tuesday. So I'm going to be looking at that. Chewy is another one. They report after the market on Thursday. This is one of those stocks that was just killing it in the pandemic. Recently has sold off. Look at that. Look at that chart. So then we started to sell off. Let's see. See how if you drew this trend line, which it looks like I had already drawn back during the last earnings season with Chewy. And this is why I like my charts sometimes to not be cleaned up, because I get to see what I was looking at. Well, what was support, right, at the 76 area. So this is a very clear support area. Then breaks, and then it turns into resistance, which is what you see here. If price can break and hold above this area, and this is looking very, very good. So earnings are coming up. Like I said, I just want to get this right. It's going to be after the market closes on Thursday. We are starting to make higher lows and higher highs right here. So this is a little bit of an uptrend. If we can break this key area in the chart, which is resistance at 76, the 50, and the 200, we could be looking at Chewy making a run back into the hundreds. It's definitely possible, and this could be a huge return, depending on how the earnings are. And I expect the earnings. Now, this is obviously not financial advice, but I expect their earnings to be really, you know, pretty decent. So we went over fuel cell, Apple, and Chewy. I'm going to show you a bank stock that has been getting a lot of attention lately, and I'm doing technicals on this thing like you wouldn't believe. To me, this is setting up a beautiful base for a next leg higher, and a nice wedge, ascending wedge here to break out of, to new highs. And they have earnings coming up also. I think it's in a couple of weeks from now. This is a financial, the financials are only going to go up, especially if there's inflation, which everybody already knows there is. Interest rates are eventually going to rise, and bonds are eventually going to rise. The financials should do very well. Now, their stocks have done very well, and we can look at Citibank. You know, I have alerts set on this. I really like this stock a lot to break over 83. It's just a matter of time. Now, I set an alert for a retest, if we even get it, but a retest of around 77. And then I would look to get long on a swing trade for a break over 83. That is my play here with Citi. You're going to want to get into a financial stock. Definitely a nice play with inflation, and when the Fed lets them buy back more and more shares, they're very good values and they pay dividends. So one of my favorites is Citibank, and I also like Jefferies Financial. Those are my two bank stocks that I like. So guys, I think that's going to pretty much wrap it up for me. The market context and where we're going in the overall market plays a big role in the way that I approach trading and approach swing trading and day trading. I like to know where I'm at in the overall market before I trade, because I always want to take trades with the wind at my back. Where there's support, where there's more buyers, I want to be long. When I'm coming into resistance on our areas we post, I don't want to buy until these areas get broken. And then on a retest, then I'll get long if it holds up. So anyway, guys, I hope you enjoyed this weekly Outlook video. Hit the thumbs up for me. If you're new, subscribe to the channel, and I will see you guys all on the next video. Take care, everyone.